All right, welcome back to the latest installment of the weekly market report. This week I want to start off with a little something different. Instead of just jumping right into the SPY, let's talk a little bit about the VIX. The VIX is the volatility index of the S&P 500. This thing really tracks the fear in the market. So what we're looking at here with the VIX, anytime you see the VIX get above 23, 25, there's really a lot of fear in the market. And as you can see, the last couple of weeks, we've been trending up above that. In fact, on Monday, we hit this as a high of 35. And then on Friday, we started ticking back up again. We see the red, meaning we started pulling back away from it. So anytime the VIX is trending up, that usually tells us the S&P is trending down. The overall market is trending down. So we want to watch that. The big thing about the VIX too, when you see it get above these levels, is you have to kind of look back in history and see what that kind of means. So if we pull out to the monthly view, you'll see there's only very few times we've even been higher than 35, right? So we'd have to go back to even COVID back here in March 2020 when VIX hit a high of 85, right? 85.50. So even when we hit it there, it didn't stay up there long, but it did hang out back down here in this 25-30 level for a while, and we saw the market have a lot of volatility, a lot of trading opportunity, but we did have to be careful as the market was pulling back. Even if we come into tariff day here in April, you saw this one, the VIX hit a high of 60. So anytime we start getting above the levels we are now, you really have to pay attention to what's going on in the market. You have to start protecting your positions. You have to really think about maybe putting on some puts for protection, or if you're an options trader, use puts for profit in those situations. The other one I wanted to look at real quick, because this is a very big deal right now, especially with what's going on in the Strait of Hormuz in Iran. We're having trouble. 20% of the world's oil comes through that strait. You really want to pay attention to the price of oil right now. Last Monday, oil jumped all the way up to 120 as the futures opened. We did pull right back down and we traded right around 85 for the rest of the week. But Friday, we saw another big, Thursday and Friday, we saw another big push up higher. There's a lot of talk about oil staying above 100 for a while. So as you see what's going on, just pay attention to the Strait of Hormuz. If the strait opens back up, ships start coming back through, then the price of oil will start dropping again. And when that happens, I think you're going to start to see a nice bounce in the market. So let's jump right into the SPY for the week. What we had last week, we hit our targets last week, which was up here. And we hit our target on Friday. Our new target for this week, I'm moving that one down to about 650, which is going to be our next support level here. You see we have evidence here back in November, as well as back in October. So this is the place where the SPY dropped down, bounced off, and made new highs, right? So we're looking for that same type of action here. Hopefully we get it. If we break below that, then there's really not much support below. So we have to really be careful. So if we do get a close below the 650 level, you really want to start maybe considering moving some of your positions to cash, because that means we're going to be looking in for a lot more pain, and we could be dropping down to 620, maybe even 600 soon after, right? And that a lot of that is going to be tied to what's going on in the war. So this is our move for SPY. We've now broken down from when we were looking at it here in this channel. We broke down below this 670, like 669, like we talked about before. And now we have to look at if we're going to start in this new range of 670 to 650. If not, and we break down further, then we really need to step back and let the market play out, figure out where it's going to find its support before it bounces back. Again, a lot of that is going to be tied to what's going on in Iran. So let's jump right over to the QQQ, which is the tech index, right? So it's NASDAQ 100. We're looking at this one here. We hit our targets from last week as well. We're coming down to this 200-day moving average. Will it hold? I don't think it will. So I do expect our targets to drop a little bit further. We're looking at maybe 580 here coming into this next week. So we'll see how that one plays out. But again, I think we're in for a little bit more pain earlier here. The other thing that's happening in the news is that we have the Feds coming in, and they're going to determine on the next set of interest rates on Wednesday. So keep an eye out on that and see what happens, whether or not they cut rates or raise rates. The market is expecting them to do nothing because we have inflation is ticking up because of oil, and then unemployment is also going up as well. When you have those things, the Fed is really in a a no-win situation, and they just kind of have to hold the rates and see what happens before they can take any other actions. So again, QQQ, we're watching this 580 level. If we get a bounce, then maybe you can look at some buying opportunity there. But until that happens, you really kind of have to wait and see. But I think we're looking for some more pain here. So we're going to see what happens with that one. Jump right over to the DIA. DIA, we had expected it to jump higher this last week, and it did on Tuesday. We got this new high, and we hit our target on that high. If you got out that day, you were good. If you held on, then you went ahead and took some losses, right? But now we're down to near this 200-day moving average. I think in the DIA, we're going to see another little bounce here. This one is a smaller set of stocks. These are the biggest stocks that a lot of your institutional or big money buyers are going to be looking to jump in now that they're really cheap, coming off of this all-time high, 50,000. They're coming down to this 200. This is a decent level here. As you can see, we didn't really break it too much. So I think that this area is going to hold right off of the 200 and bounce up. The Dow sometimes will move different from the S&P because, again, it's just 30 stocks, but it's all the big blue chip stocks, the IBMs, the Caterpillars, the Boeings, and those guys. So you don't want to see if we get a little bounce here. If it becomes a little bounce like we had on Tuesday and it pull back again, then, of course, we're going to head lower, and that lower level would be 457. Next, we have the IWM. So this is a small chip stocks. In this one, we had our target there set a little bit higher here. We hit that target, and now this target we're looking at for this week is right down to the 200-day moving average, so it's about 240. A lot of these levels up here now I'm going to take off the chart because they're not really that useful to us anymore, especially the dashed lines. But again, you can see here with the IWM, now that I cleaned up the chart, that we're right on support, right? So can we hold this level and bounce up? That might be an option here. So we want to watch Monday, Tuesday, Wednesday, what happens. If so, then we're looking at coming up to the 259 level. If not, we're going to be looking down to our 240, right? And even a little bit below that 237, right? So this is going to be the next area of support. We're going to want to watch for that. I threw a little dash line on this one. So if we do break 237, this is where we're coming down to, which is going to be another big move for the IWM. So you're going to pay attention to that. If that happens, you're talking about a drop of, say about another 7%, which is going to be huge, right? So now we're into correction territory. You really want to start considering, if you're trading these small stocks in the Russell 2000, you want to consider really looking at put protection, or even just taking some money off the market, let it sit on the side, let the market settle down, and then jump back in. As we've been looking through the last couple of weeks here, we've been watching gold and silver as well. So gold has just been going sideways here with everything going on. We thought it would move higher, but it did not. Partially due to the strength of the dollar, with oil being restricted, the US dollar gets stronger. So when you see that happens, gold kind of takes a pause, as you can see here right now. But there's a lot of action going on with central banks with gold. They're starting to pull that reserve now that we have a lot of war. They're going to need to have gold on reserve in case the dollar crashes, right? So we're going to be continuing to play this and watch this to the upside, but right now we're just kind of moving sideways. Not much to do here. We kind of have this baseline that was just created over the last couple of weeks at 5,005. But below that, we have our 50-day moving averages at 4,900 and 4,925. So that's another level we're going to watch if it can bounce off of there and continue this trend on up, right? So that's what we're going to pay attention to for gold this week. We expect that to maybe take a bounce after a couple days here of what's going on with the oil and this situation. Silver looking the exact same as gold. Silver, just kind of starting to drift sideways here. It took a little dip here, so maybe silver can take a pullback, but I expect it to continue just like gold. So our levels are holding here at 82, below that 71. But I certainly expect silver to get right on back up to that 94, 95 level. Bitcoin, this one has been interesting. A lot of buzz been going on for this one. I don't understand why, because as we look at the chart here, Bitcoin is faking people out again, right? So if you're watching the tickers every day and they're telling you Bitcoin is up 4%, 3%, whatever it might be, but when we come to the chart, you see what actually happened is they tell the story of Bitcoin being up, and they talk about it getting back up to 73, 7,400 here. but it didn't close there. So the bulls couldn't hold it, right? So what happened is the sellers came back in and pushed the price right back down below our resistance area here of this 71,000. So I've been telling you all along, until Bitcoin can get above and stay above the 71,000 with some volume and with some strength. As you can see, we look at the volume down here. It was very low on Saturday. It was not that great on Friday, and neither was it the rest of that week. So really not getting a lot of, cash flowing into this to cause it to push up. They're getting you ready to fake you out probably on Bitcoin. So let's pay attention to what's going on there until you really break above this level here, this 74, 75,000. I wouldn't even be thinking about buying any Bitcoin at this point. Flipping on over to the rest of the cryptos, Ethereum, same thing. It's actually worse. Ethereum didn't even peak or stay above our resistance level here at 2150. So we're just going to continue right here in no man's land, right in the middle. Let it sit and let it wait until you see that nice solid close above with some nice high volume. Nothing for us to do. XRP, same story, right? So not much to do here either. So this is what we're looking at for the rest of the week. Thank you for watching, and I'll catch you next week.